Good morning. It's Market Day Report. We're so glad you're with us to start another trading day. Now, hang on. The headlines have already started today, so we expect markets to be moving. Speaking of markets, how about we look at how the corn market did in the overnight session? Half penny higher at 434 and a half. On the December, deferred contracts were lower. Corn market will try to make it 5 in a row today during the day session, which opens in 15 minutes. Soybeans in the overnight session up over 15 cents, 15 and a half higher on the November. It did touch above 11 bucks, but came back to 10.95 and 3/4. And then we get to the wheat market, and wheat, Chicago has been higher 3 straight sessions, lower overnight, down 4, 5.28 and 1/4. Hard red has been higher 6 straight sessions, 5.17 overnight, down 5 3/4. Spring wheat in the overnight session was mostly lower, and the cotton market has been higher 5 straight sessions, but finding some pressure there at the 66-cent level, and pairs back to 65.37, down 64. Brian Hoops is president, Midwest Market Solutions. Brian, normally on a Thursday, I'd say, let's talk flash sales, and we'll find out who's been buying what according to USDA and the weekly export sales report. We get none of that now with the closure, but I guess you got another little nugget overnight.
Yeah, this might be even better than flash sales. You had a trade agreement and produced a lot of volatility overnight. You look at the trading ranges that we saw in soybeans, 45-cent range in the overnight, and over half of what we traded as far as volume in the overnight, over half was done compared to yesterday's trading volume. So just massive amounts of quantities being traded overnight off of some headline news. And that's kind of the world we're living in right now, is you have this headline risk. President Trump said there was a great meeting and China would buy substantial amounts of soybeans, and no details. So it kind of caused a buy the rumor, sell the fact sort of effect, where we sold the grains off after those comments. But an interview this morning with Treasury Secretary Scott Bessent, who clarified some of these comments, then produced a sizable rally. We pushed to an outside day higher in both corn and beans, pushing sharply higher in the case of soybeans, as it was clarified how much product China is going to end up buying. And it looks like they're going to buy over 12 million tons of soybeans this year, and then commitments to buy 25 million tons over the next 3 years. So this is pretty substantial amounts of soybeans. Plus there was other countries, other Asian countries identified that would buy another 19 million tons of soybeans. So these are some significant amounts. And when you total everything up, you're looking at Asian countries, China, buying over 100 million bushels of soybeans, over 100 million bushels of soybeans, I should say, just off of these purchases. So a trade agreement has been completed. It's a very bullish agreement as far as soybeans go. The reaction has been friendly. Now the case is, how do you market off of this? Well, cash beans, certainly are probably going to be higher here this morning off of this news, and where the overnight market has gone. Farmers looking ahead to next spring, probably going to want to plant more soybeans, get back to more of that traditional acreage rotation between corn and soybeans due to the cost of high fertilizers. So I think you'll likely see more planted acres next spring, given these trade agreements, and probably less corn as we go into the 2026 marketing season.
Of course, anytime we talk about China and agreements, we probably need to look at that fine print that says, how do we enforce such an agreement as well? And I know that will garner quite a bit of attention here over the next few weeks. Hey, Brian, let's take a break. We'll come back. Let's see what's happening in the livestock markets. That's where the fireworks have been over the past week. What about today? Find out next. This is Market Day Report. So we'll be watching closely cash trade this week. Bids and asking prices have been, well, there's been I wouldn't say a crevice between it. I'd say more of like a Grand Canyon between the two this week. But we'll see if we narrow that up and we get cash trade done before Friday. All right, let's get to live cattle futures. This is how we settled yesterday, and we settled off the highs at December 231.07 was what, $2.50 or more off of the December high, 450 higher on the session, and even the October, which expires tomorrow, 231.40, 390 higher, but really having a difficult time pinpointing where the market believes cash trade will end tomorrow. The range was 229.5 to 234. Feeders have been the leaders, and they were yesterday, up 935 on the November, 980 higher on the January, and then the hog trade yesterday lower for the sixth straight session. Brian Hoops, Midwest Market Solutions, what are your final thoughts here?
Yeah, the cattle market's been very wild recently. And so, well, so the grains and metals and stock markets, all these have had big gyrations, but probably none as much as cattle and feeder cattle. I think we're starting to get to maybe a little bit less wild type trading and big swings and going to consolidate a little bit. It looks like the calls this morning, bid ask, maybe 50 lower in live cattle, 100 lower in the feeders. We're going to go back to normal trading limits today, so we won't have expanded limits. I don't think we'll test them as we're still trying to determine where that cash trade is going to be. Now, our slaughter pace has increased substantially this week compared to last week, and why wouldn't it? When you have cheaper animals, packers are going to step in and buy as many as they can at cheaper money, and they're repairing their lost margins by doing that when cutout values have been mostly trending higher over the last 2 weeks. So they're making up for some lost ground. I think we'll continue to see a lot of this volatility, but maybe some sort of a technical correction will ensue here in this cattle market.
And I guess final thought here on the hog, 6 straight sessions lower. What's happening there?
Yeah, the cash market has come down quite a ways, and the futures just are kind of anticipating that the cash is going to continue to fall. Now, as we get into November next week, usually the cash market stabilize and maybe even improve a little bit. I think the futures have probably anticipated or overextended to the downside, over anticipated how far that cash is going to fall. It is showing signs of stabilizing here now, and we may start to see, hopefully anyway, those hog markets start to recover, pair up against that cash index, which is maybe another $10 to $15 higher.
Yeah, good insight. Brian Hoops, Midwest Market Solutions.